people do not trade the markets, they trade their beliefs. Now that got me scratching my head for a while to try and understand what that meant, until I actually experienced it myself in my own trading work, but also when teaching other traders and trying to model what they do, the successful ones.
Hello Ron, and thank you for joining Duguscogby TV today. It's always a pleasure to have you here in our studio.
Thank you. Pleasure to be here.
No, you're welcome. And let's get started today by looking at trading psychology as something that can really be implemented to make you a much better trader. Let's jump on here. So how important in general is trading psychology?
Well, in this new year, I'm launching a service that focuses just on this called Intensity. And the main philosophy is actually following on from a world class trading psychologist called Dr. Van Tharp, and he has long said that people do not trade the markets, they trade their beliefs. Now that got me scratching my head for a while to try and understand what that meant, until I actually experienced it myself in my own trading work, but also when teaching other traders and trying to model what they do, the successful ones. And it's broken down quite well in this metaphor of an iceberg, made famous by the Western grandfather of technical analysis, Freud. And it's just basically saying that the top part of the iceberg is just the tip of the iceberg, and there's a lot more down below underwater. And it's a great metaphor and kind of presentation of the fact that 80% of a successful trading strategy is actually all to do with psychology. And only 20%, which is surprising to a lot of people, is specific to things like the logical decisions that we make, risk management, which is key, but still part of the conscious part of the thought process of the mind, and trading strategy itself. Now, the 80% is the values, the perceptions, the habits, the beliefs, the fears. This is part of the subconscious mind, which really does control a lot more than we think it does.
But Ron, knowledge is not the only thing you need in this area, is it?
Well, contrary to popular thinking, a lot of people think that knowledge is everything, and they get this information overload, or the kitchen sink experience, which tends to lead to analysis paralysis. And so while knowledge is important, too much of knowledge is exactly that. It's too overwhelming. And so what's more productive is actually focusing on a peak performance state. And that's a mixture of a balance between the mind, the body, and our emotions. If we think of that triad of strategies, the center point, the synergy of all those three strategies together is what we call the trading zone.
So Ron, you've got the three things there. Let's start by looking at the mind, and how important is that to a trader?
Well, the mind is everything, and in the words of a brain scientist called Dr. Joe Dispenza, he says that our personality is our personal reality. And so that basically means if we change the internal, we can change the external reality. The problem is a lot of people feel that the condition that they're born is fixed for life. So their IQ level is fixed, their personality traits fixed, and that's it. It's a game over. The reality is that our biography is not our destiny. It's just a home base that we can work around through self-awareness and then build on that. It's just the foundation, building blocks of us as people. But scientifically, the hands-on practical advice is to treat our mind as a muscle. So just there, that big diagram there, that looks like quite quantum science kind of look, is just predicated around a term called neuroplasticity, which is basically the fact that the brain is like every other muscle, and we can either use it or lose it. A lot of people, because they don't use it much, they decondition themselves to getting to that peak state. But of course, we do have the potential for greater things if we do train the mind.
So then let's move over here to look at this negative, positive, loss aversion, be aware, be responsible. Can you explain that a little bit further?
Well, this is all to do with mental strategy. So I want to make sure that all those who look at trading psychology have practical steps that they can take in order to improve their trade performance. And I began with the negative just so we can deal with the heavy lifting early on, and also get to the truth of the matter, that a lot of people, the number one behavioral trait that people have problems with is loss aversion. And in English, all that means is people hate losing money, and for good reason. The issue is that when we tend to lose money, and that happens, the best of the best traders do lose money, but on average, they make more than they lose, and they manage their losses very well. Either way, the people that tend to lose and tend to feel very emotional when they do run into extreme fear, frustration, but also despondency and sometimes denial. And the last thing I would say is something called excuitis, which is basically blaming everything on the outside, but not taking accountability on the inside for that trade decision.
Okay, let's move on from the mind and head over to something people might not associate with trading, which is the body. How important is it to keep healthy and look after your body as a trader?
Well, this is a very underestimated point. The most important technology in trading is our body. So the trading platform matters, but more than any other external device is actually the one that we live and breathe on a regular basis. And so fitness is a big part of that, but as part of that fitness focus, it's the athlete peak performance that matters. So if you speak to a lot of the successful traders out there, they model themselves to athletes. Just like an athlete prepares for a race or prepares for some kind of sports match, there's a lot of focus and real conviction work that is done, and a lot of discipline. And so that with good fitness allows for a stronger belief in oneself, but also higher energy, better focus. The other part of the equation is of course diet.
Yeah.
That's the bigger part of the equation. Now, I'm not an expert in either of these fields, but I just know that I tend to be more effective when I'm healthier and when I eat better. And the point on the diet is not so much what's the best diet, because everyone has their own theory on that, and they're invited to do what they want to do. The issue is avoiding the really bad examples of diet. And a lot of traders out there who are just starting have poor diets. And those diets tend to be short-term oriented, so high in sugar, high in carbohydrates, or the takeaway mentality where we eat at the desk as we're trading because we feel the need to. All of this might work for the short term, but not for the long term. And this does change our emotional state and our focus.
Mm-hmm. And finally, you've got calming exercises here. What kind of stuff would that involve?
Anything that basically calms the brain-body state from what we call, in terms of, on the scientific side of things, the brain state from a beta problem-solving state, which we're constantly in because we're always trying to be active, to what we say is either an alpha or theta state, which is a bit more calming. We're a bit more aware of ourselves, much more creative. Personally, I tend to focus more on regular alternative disciplines like meditation and yoga. To those who are open to that, I highly recommend it. Otherwise, it can just be having a reflective moment in the morning or in the evening before sleeping, or maybe a sport like golf or something. Keep in mind that a lot of people who trade, what's the first thing they do when they wake up or just before they go to sleep? They're picking up their mobile phones, checking their messages, and even worse, checking the prices on a minute-by-minute basis. And this is really it's the road to ruin. It's really not a wise idea in the long term.
So keep stuff off your phone.
Designate a time to do all of that, and have a time to calm the body, and also to filter the noise accumulated throughout the day in life, but also in trading. And I don't call it mindfulness, I call it mind emptiness. We need to actually empty the noise in the mind in order to get to that peak state so that we can reset for the next day.
Mm-hmm. So finally, let's move over and talk a little bit about our feelings. How can our sort of emotional state affect trading, and how do we balance that out?
Well, this has been a grey area for a long time because it's been difficult to quantify, but now science is proving what we've always known. Emotions do matter. And so how we feel in life, but also in trading, actually affects our biochemistry. That's what the latest science is showing. Yeah. So here on the left side, in the color red, we see the heart communicating with the brain, which does happen, contrary to opinion. And the way that it does that changes according to our emotional balance or imbalance. So scientists call that an incoherent state versus a coherent state. Incoherent state is when we're feeling frustration, anxiety, worry, or irritation. So it's more of a volatile, zigzaggy communication between the heart and the brain. A coherent state, when we're feeling positive, we're grateful, and a bit more caring about things, tends to be a lot more harmonic, a lot more balanced. Of course, we tend to feel unhappy and upset when we're fearful of a trade or we're losing money in a trade. I'm not saying that we should be grateful for that. I'm just saying that we need to moderate those emotions. And what other things do you think might be useful for a trader in that kind of situation?
In terms of not being overly excited if you make money as well, I guess it's a balance from both sides, do you think?
Yes, absolutely. And we often look at the negative side of trading, but actually there's also a positive side with those who have a good win. And that can also lead to the other side of the pendulum swing, and that's greed. So some of the top traders actually know when to pull out of the market and bank that profit. And that's to avoid the emotional extremes, not just on the negative side, but also on the positive side. And of course, we must remember, just to bring it back to markets, emotions do drive the markets. And that's the very last slide that we have there, just showing how the cycles in the markets are actually driven by emotions.
Well, I'm going to take your advice and run off for a round of golf, I think. Ron, thank you so much for speaking with us. It's a really fascinating topic. Thank you very much.
Thank you very much.
And thank you for watching. If you like this interview and would like to find out more, be sure to head over to dukascopy.tv.